Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters Podcast. I have Mr. Nate Ohlrich with me today. Nate's story is amazing. It's going to be very interesting. He used to run nutrition store businesses, and then he moved on to become a real estate broker. So welcome, Nate.
Thank you for having me, Alpesh. Yeah, it's great to be on here. I appreciate the opportunity.
Absolutely. So can you give us more introduction about you, like how you moved from nutrition stores to real estate and then brokerage?
Absolutely. So back in about 2009, me and a business partner were friends. I used to work for a nutrition store when I was in college, and the owner of that store started franchising, and I had always wanted to be my own boss. So I pretty much talked in my roommate at the time. I'm like, hey, man, we need to open up some of these stores. I think it'd be great. You know, we won't have to answer to anybody, and there's potential to make some good money. So moved to Wisconsin and ended
Wisconsin.
Up in Madison's where we had our first store. Yeah. Lived up there for about 5 years, and it was good. We had stores in Wisconsin, North Dakota, and Minnesota. And probably around 2015 or so, the market was just changing. There was a lot more, e-commerce sites that have supplements and all that sort of thing. So it got harder to make money, and also we used radio to drive traffic, and that was changing as well with Sirius and XM.
So. Yeah, Facebook ads, and then later everything moved on to online, right? Spotify.
Correct. Yeah. So we knew it was time to kind of move on, and we ended up selling out of those stores in 2018. And while we were franchisees having those stores, every month we're cutting checks to our landlords. These were retail brick and mortar locations that we had. And, it just really drove home on, what the landlord is doing to make money and what I was doing to make money. And it just sounds like, these landlords, they got it figured out.
Yeah.
I need to do that. So while my business partner and I had those stores, we ended up investing in a retail, like triple net lease building. We still have that. It's done great for us. And then kind of diverted a little bit. I thought, maybe the best way would be single family houses and getting a large portfolio of those. And, that's what's going to take me to financial freedom. And I ended up getting one. It was harder to find more deals. There's just a lot of competition for them, at least where I was looking. And I kind of went through, I even started contacting executors of probate estates, trying to, find deals that the price wasn't going to get bid up. But I kind of tried my hand at that and then moved on, and then was listening to podcasts and really got turned on to multifamily investing and just owning apartment buildings, either, actively and within like a partnership type thing, or syndicated deals where, you're basically don't have any responsibility. You just check your bank account and watch the cash come in. So that's kind of the evolution that I took. In 2018, we ended up selling out of those stores. And then I did property management and brokerage for a firm in the town that I currently live here in Omaha. And that really opened my eyes and just put me, around more real estate minded people. And, it was a great experience. I still do brokerage kind of on the side right now. My main gig is helping, family and friends invest in other syndicated deals here in the Midwest. But yeah, that's kind of it.
That's awesome. And I could relate to your story a bit because when I was doing my master's in computer science in New Jersey, I worked at GNC store for over a year.
Oh yeah.
And I enjoyed it a lot. I had to learn about every vitamin, every supplement available there. We were selling 45,000 different products, right? As you
Hmm.
can imagine. And I had to read up. I'll read every day. And I was also studying for my master's in computer science. So it was an interesting journey, but I enjoyed because before then I used to, of course, do like more labor job. So this
Uh-huh.
was at least more fun. I was enjoying and talking to a lot of people, you know, it was different experience, and that got me started into fitness actually. And I love working out now. I
Hmm.
understand what supplements I need to take, etc. So it's been yeah, it's been great for me actually.
Yeah, and that makes me think of, I saw you doing the fireman carry with the kettlebells.
Oh yes, you remember
Yeah,
that.
that looked tough, man.
it's
I need to start doing some of that.
It,
I
it,
kind
it
of.
was crazy. I had never done that. So, and not to get sidetracked, but I used to do Spartan and Tough Mudder races, and
Okay.
we would have to do the farmer's carry, but that was like for 5 minutes,
Mm.
not unilateral. You're carrying like a 30-pounder on both sides. This was different for 30 minutes, unilateral.
Yeah. Yep. No, that's
Yeah,
great.
no,
I love
no,
that.
it was crazy. So let's get back. But so you sold out of the nutrition store. What was your very first real estate deal, and how did it come to you?
Very first real estate deal would have been in 2013, where we were doing okay owning the nutrition stores, and just reached out to brokers at that time. So kind of going from, I thought owning retail, a lot of retail properties was the way to do it, then going to single family houses, and then, and what I truly feel the best at now is multifamily, um, is just talk to a lot of retail brokers in Madison where we lived, and said, hey, we'd like to, find something that's going to be a solid property for us. And just through that relationship, and I'm still friends with that broker up in Madison, he was able to find us something like awesome location. It's going to have value just due to the location. And yeah, that's it.
So, and can you share how did it work out for you? Like, what was if you remember the price, numbers?
It was just a little over 2 million dollars. It's a corporate restaurant that's in the property. The
Okay,
building's like 4,500 square feet, a pretty good sized lot. And the thing I like about that, and I still do like about retail, right now, obviously everything's changing with
yeah,
Rona and all that, but the length of the lease term. So like, actually, after we first purchased it, they renewed their lease for another 10 years.
wow,
So that's great to know that's kind of locked in. It's a
yep,
corporate
and it's a
tenant.
triple net.
Yeah, so we're just kind of collecting the check on that one. I guess now, that my eyes have been opened, it's a very solid property for us. But I guess I've done things now that I would say even top sort of the performance of this first property, just because we've been able to add value, refinance, and get our money back out and
Right.
work other places. But yeah, so this retail property was the first one in
Got it.
2013. Yeah.
So what different types of properties do you own or manage right now? So retail, and then you mentioned multifamily, and is there
Yes.
anything else? Office building or
I don't own any
okay.
office. I've helped people find some buildings that they've purchased. I have one single family house, and then for the multifamily, it's about 700 doors now. What I have, ownership interests, vary on
Right.
the different deals, and then I'm in a few different syndications, some multifamily ones, and then a hospitality one that, um, I guess if you're going to ask the question, kind of what's your worst deal you've done?
Yeah,
The
I was I was going there when you said hospitality.
Yeah. Well, so we had to do a cash call on that one.
Uh-oh.
Um, yeah, that was a few months ago, and so I'm really, obviously for everyone's health and just the economy and all that.
Yeah.
I'd like to see that get better, but the hospitality industry is hurting right now. So it'd be great if things would continue
Right.
to improve.
And is that a hotel or resort? And
Uh,
when did you acquire it?
Hotel, and I'm just an LP on the deal.
Okay. Oh, okay. So someone, okay, got it.
Mhm.
Yeah, I think right now is a good time to get in hotel, and I'm seeing a lot of people are jumping in because you can buy pretty, distressed. They are getting 40-50% off the, price. So it may work out well because I think hospitality will bounce back. There is no other choice, and when these things open up, when everyone is hopefully vaccinated,
Mhm.
people will travel even more than they used to just to catch up, right?
Yeah,
So yeah,
I hope so.
let's think of it that way. Because I was an LP in a deal, student housing deal, same thing.
Okay.
They were already managing it pretty bad.
Yeah.
Let me put it this way, that I will never work with that operator or syndicator again, and
Okay.
I would not recommend. But they were already pretty bad, and they were not making any money for 3 years before even COVID. So if any business is already struggling, then of course they will be in big trouble when something like this happens, right? This is a
Right.
black swan event, and
Mhm.
that's exactly what happened. They sold, and pretty much every LP investor lost every penny in the deal.
Man, that's rough.
Yeah, so
That's rough.
it
People
was
don't really
bad.
talk about, kind of the bad deals. I wish people would, because I
Yes.
feel like that's how I learn, good, and I think other people can kind of glean, wisdom from those things. But thanks for sharing that.
No,
That's good.
absolutely. Yeah, because we always want to talk about how we did good, right? Same
Mhm.
thing when I speak with my friends and about stock market. They're, oh yeah, I'm making 10-15% a year. I'm like, are you sure? Do you look at how much have you made for last 10 years on average? And how much
Right.
taxes have you paid?
Yeah.
No one knows.
Yeah, I know. Well, yeah, especially the tax thing where,
Yeah.
I mean, it's a huge thing that, people just don't talk about enough, I don't think.
Right. So, buying from nutrition store to buying the retail building, then why did you choose to work at a brokerage and become a broker?
Just to really immerse myself and learn as much as I could in the shortest amount of time. I remember having lunches and just talking with other investors. I knew, like, how can I really learn the best? And they said property management, and because you kind of see all sides of things, you see
Right.
how the tenants are communicating with the landlords and all that. So I did do property management. It was for commercial properties, and there's all sorts of personalities and crazy stuff going on, um, and so that some of it's entertaining, and it is what it is. But so I did that, and I learned a lot. But well, we were just talking before this. I have a family. I have 3 kids. There's
Right.
mouths to feed and a mortgage to pay. So, um, brokerage, I figured, was another, area where I could learn a lot about investing and in real estate, and the earning, potential was a lot higher than doing property management. So, did property management, and actually, like a month or two after I started that, I went into it knowing that I was going to be a broker, so I'd be able to get commissions and make more money. And so got my license, very soon after I started doing the property management. And then I started doing, brokering deals, if it was, helping tenants find spaces for lease, or I had sold some land and brokered some office buildings and stuff like that. But then it was time, I guess I kind of figured or told myself I got my fill of, property management, and I kind of learned as much as I could. And then I focused on brokerage for, a good couple years. And then that, has really led me to where I am now, where I'm helping, my friends, family, and clients invest in syndications, and just sort of telling them my story and letting them know what success I've had.
Got it. And you did mention about off-market properties. So how do you find off-market properties?
It's super easy. No, it's
Yeah, if you can
not.
take us through the process.
Yeah, yeah. There's really, not any secret. And I guess I'm curious to know if you've done marketing for off-market properties after, I'll give you my answer. But you have to do everything, and you have to do everything consistently, because these people, if you can find them and have some inside information, or know their situation where they might need to sell if it's distressed or something, then I guess that kind of takes you a half step closer to making a deal happen. But going from, I've sent out direct mail campaigns. I guess first of all, you need to figure out what properties you're going after and for what reasons, and then finding their contact information.
Right.
And then, I've done phone calls, I've sent out mass text message campaigns, contacted, on Facebook, or if I can kind of figure out, like, okay, maybe this person's grandfather or mother or something is the owner of this building, I'll try to, go through them and get contact information that way. But really, the internet is your friend, and
Right.
just try to, figure out any way, because, people don't want to be contacted. So that's your job, is figuring out how to get a hold of them. And then, you have to know what you're talking about too when you call them up. And I guess I've
Right.
been fortunate enough to have participated and invested in enough deals where, they know I'm serious and I'm not just someone, kicking tires. We close on deals, and it has to make sense, obviously, but yeah, basically doing all those things and then being consistent with it. And, maybe it's not the right time. You really, have to approach these people with the concept of, you want to build a relationship with them, because the first time you talk to them, they might not be ready to sell. So, you know, you want to be talking to them once, every month or so, every couple months, every quarter, so you can stay on, at the top of their list. If they do decide to sell, then you would be, the person they'd call.
Right. And I have done so many different businesses as well, small, or got my hands into those. But real estate is the most relational business I have seen, right? Means from the get-go, from the moment you want to acquire the property all the way to if go full cycle and you are going to sell the property, right? So it's very important to build that rapport. So let me ask you this, because you have tried from direct mail to phone calls. Do you call them yourselves, or do you have a team who makes those calls?
I've done it myself, and I think if I really wanted to, ramp everything up, I should
Right.
have a VA.
Yeah.
But I guess I've tried so many different things, where now that's not really my focus, because in the efficiency of time, I could spend so many hours trying to find, a off-market deal, or if I have relationships with other, general partners or people putting deals together, that I know that the deal is a solid deal, I guess I'd rather spend my time having those relationships and kind of having deals ready for me. And then when I invest with them, I can bring people along with me and let people know about opportunities that way.
Got it. So let's talk about, but the off-market properties. Let's say as investor reaches out to you and they are looking to acquire an off-market property. Is there any conflict of interest because you are also an investor? Let's say you find a property and then you're like, oh, you know what, this will make sense for my own personal syndication or whatnot. Uh,
Right.
how do you work through that?
I haven't really ran into that situation, because the brokerage that I've done hasn't been where I've represented a buyer looking for a property. I've done my own marketing for personal investments, and then I've brought in people with me. But that would be a tough situation. But I think I would have to probably decline the business or tell them that they should use somebody else, because it would be in conflict where, if I did find something for them, and then if I don't tell them about it, or if I would, keep it for myself, that's not the honest and the right thing to do. So, there's so many different, depending on what someone's budget is, or unit count, or condition, or location, for them to be looking for the exact same thing that I would be looking for, I would, that would have to match up. But if it did, then I would probably, I would be open with them and let them know that I'm probably not the best person to use for this project for them, because I'm looking for the exact same thing. But if there's something different, I could help them or refer them to somebody else.
It makes sense. So, let's say as a intermediate or beginner investor, if I reach out to you, or if I'm looking for something, a property, what are some of the things I should look out for when I'm choosing a market as well as a broker?
I think so. First, to talk about the broker, like you really have to get their attention, and if you're just starting out, to get to have that broker return your phone calls, um, like that's a feat in itself.
Yes.
um, and so I would say just stick out in any way that you can, and if they do send you deals, you need to be very responsive to them and let them know why or why not that deal wouldn't
Mm.
work out for them. And then for the markets, I guess that I invest in and I have others invest with me in, they're all in the Midwest here, and we're starting to go further south. But Omaha, Des Moines, Sioux Falls, Kansas City, and then we're getting into Texas too. You want a diversity of employers. So if some industry has a huge shift and there's a lot of job changes or something, you can kind of insulate yourself from population decline, because really you're wanting the markets that have population growth and job growth, but then diversification is too, in case something wonky would happen. But um, I feel like I've always lived in the Midwest, so that's kind of what I'm used to, and that's really where I look. But I know there is more money to be made if you're going to look where there's more kind of pricing and value volatility, on the coasts. But I just haven't tried my hand at it because I'm not familiar enough with those markets.
So my last question was about the market actually. Which markets are you in? And you mentioned all the markets.
Mhm.
Can you tell me why those markets, or because some of the markets, I have not, means I have heard, but not heard about them a lot. Like, but you always hear Dallas, Texas, Austin, and at Atlanta, right, or Orlando,
Yeah.
but not Omaha, right? Even though
Right.
I know Warren Buffett, right?
Uh-huh.
But
Yeah.
or Sioux Falls, right? So why those markets, and what's going for those markets, right?
I just feel that they're safe because the population growth, like none of them are shrinking. They're all growing very slowly, and it's what I'm familiar with. And then touching again too on the employer diversification. And some of them are smaller, and maybe that might make some people nervous. But I really think if there's a metro population of 100 or 200,000 or greater, I think you're going to be safe. Once you start getting too small, once you want to dispose of the asset, I think your pool of buyers is going to be
Right.
a lot smaller. But I don't know. These markets, I've been to them all, and I'm comfortable with them, and they're safe and growing. So that's why I pick them.
That's awesome. So let's take a quick break, and after the break, we will go through the same questions I ask every guest.
You're listening to the Wealth Matters Podcast. The Wealth Matters Podcast. For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Nate gave us some golden nuggets about how he became a broker and then an investor, as well as syndicator from running nutrition stores. Nate, are you ready for fire round?
Let's do it, Alpesh.
Let's go. Would you be changing any business or investment strategy after COVID-19 is over?
I would say I'm just staying true to, a lot of people put out there that they're conservative, but their definition of conservative might be different than others. Just making sure on deals that I'm looking at or investing in that the rental escalations aren't too aggressive. You need to have adequate reserves on hand, and the business plan. It needs to be achievable, and if there's other operators that are doing that, in the same market or sub-market and achieving the rents that you think you can achieve. You don't want to be the first guy that thinks he can get, $1,200 rent for something when maybe, can only be $950 or $1,000 or something like that. So just, taking your time. There's a lot of deals out there. And some of those prices are getting pushed up, but just, remaining conservative and, always looking, but don't pull, you're not going to pull the trigger on something that doesn't make sense.
Got it. Favorite real estate or finance or any other related book?
Yes, I'll give you two. This first one isn't really real estate or finance related, but Dale Carnegie's How to Win Friends and Influence People. Yeah, it's a good one.
Classic.
It is. Yeah, I need to reread it. I haven't read it in a while.
I need to now that you reminded me. It's been a while.
Yep, it's good. It's good. That one, and then the other one I really like is Dave Lindahl's Multifamily Millions.
Okay.
I think that one I just feel like kind of lays out in simple steps and language of what you need to do if you want to be an investor.
Got it. Any tool or website you recommend? Maybe for finding off-market properties or maybe running skip trace, anything, or you cannot live without?
Yeah, I'll give you two. I was thinking about one. The first one for off-market properties, just white pages. I feel like that's pretty accurate. It's going to give you a lot of choices for phone numbers if you're trying to get a hold of someone. A lot of them don't work, but usually there's one in there that does. And then an app on my phone I've been using a lot lately. It's called Clips. It's free for iPhone, but on all the social media platforms now, it seems to be for accessibility reasons and just to kind of put you a notch above. If you can have the captions, on the bottom of your video, it helps you out. So this app, it's free. It does the captioning for you.
Oh, okay. Yeah, because I'm paying for another app right now. Oh, I didn't know that. Clips. Okay.
Yeah, Clips. And actually, I think it's an Apple app.
Yeah, it's an Apple app. Yep. Yeah, that's correct.
Yep. So it's a good one. It saves me a lot of time, and I know I could hire somebody out to do it. But if I'm doing a minute or 2 minute video,
right,
just as good.
That's awesome.
Yeah.
Any advice for beginner investors?
Yes, Alpesh, I would say the main 5 steps that when I think about how I've kind of come along on my investor journey is figuring out these 5 things. First, your goals and your why. And we didn't really touch on this earlier, but my why I would say is maybe a little bit different than others out there. But so I have 3 kids. My youngest child, her name's Kala. She has special needs. She has a genetic disease. She's had a couple brain surgeries, which with that said, my wife can't really work a job outside of the home. So that kind of makes it my responsibility to be the main breadwinner and, be smart with finances and all that. So that's my why, I guess, putting that out there. But figuring out your own why is very important. And then establishing your goals on if it's, what type of properties you want to invest in, or if you're looking to replace your current income, whatever that is, and you might not know, but thinking about that, and then setting goals, writing them down, very important. And then third step would be educating yourself, listening to Alpesh, on podcasts. You got a great program going, awesome job. Doing that, reading books and conferences and meetups, all those things are going to help. You really have to submerge yourself in there and do that so you can get confident. And then the fourth step would be networking, and that's going to be with other brokers, other investors, podcasters, anybody, because you need to take that knowledge that you learned when you're educating yourself in order to have intelligent conversations with these people and kind of take that learning to the next level. And then lastly, you need those 4 for the 5th one, and that's take action.
Yes.
So, you probably aren't going to be 100% confident, but in order to pull the trigger, when a deal comes your way, you might only have a limited amount of time of, you can't get stuck in analysis paralysis. Like you need, once you figure out what you want, then when it's right there in your lap, like you gotta do it, you gotta take it. So doing all those things, I would say those are the steps to financial independence.
That's awesome. How do you give back?
How do I give back? Well, talking with other investors and letting them know, things to look for and look out for. Something else I've done, I started a company called Scarlet Victor. The website scarletvictor.com. And going back to my daughter, children's hospitals where she had her surgeries, half of all the profits from this website, Scarlet Victor, is donated to Children's Hospital. And kind of real quick, the history behind Scarlet Victor. So I'm in Nebraska. Everybody loves football here. There's t-shirts on there that are in the theme of Cornhuskers and Nebraska football. So they are pretty popular. And actually, I did all the designs myself. Way back when I was in college, I got a degree in graphic design. So
Wow.
that's one thing I did. But yeah, donating half those profits to Children's Hospital just because they've treated us so well.
That's awesome. How can my listeners reach out to you?
Yes, sir. The website for my company is redelminvesting.com. If you want to send me an email, it's Nate@redelminvesting. That's REDELM investing.com. And also while you're there, I wrote a book called Fearless Investing. It just gives you more history on me and what I've invested in and what I look out for and, things to watch for so you can become a successful investor. Yeah, that's it. LinkedIn, Facebook, Instagram as well. But I guess LinkedIn, it would probably be where I spend most of my time. But going to my website too is going to put you in touch with me.
Yeah, and we connected on LinkedIn as well. Thank you so much, Nate, for sharing your story and enlightening us with your, wisdom. Thank you so much.
You bet. Thanks for having me, Alpesh.
Absolutely.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing.